Are you prepared for the tax nightmare as a new business owner? On average, almost 5 million businesses start each year. Of those, almost 1 million don't survive the first year. And to make it worse, over half are gone within 5. And a recent survey found that 77% of business owners found that taxes are a financial burden. Well, let's be honest, we all find that they're a burden. As a CPA, I so often find that business owners are shocked when they come in to see me and find out that they owe almost 40% of their profit in tax. How do I come up with that? Well, remember, there's 15% for self-employment tax. Then you've got your tax bracket, so if you're at 22%, and then you've got 5 or 6% or whatever your state is, you can easily get to 40%. What makes matters worse? They didn't plan for it, and the money is probably already spent. No wonder small business owners find the tax system to be a burden. So what can you do to prepare yourself? That is what we're going to talk about today. It's not all doom and gloom. I have answers that can help you prevent the tax nightmare. So with that, let's go ahead and get started with our first point. Number 1, don't commingle funds. You say, Doug, what are you talking about commingle? What I'm talking about is you need to start off with setting up a business bank account. And it doesn't have to be anything fancy. Most of you are going to start off as a sole proprietor. So you're really one and the same, but at least set up a separate checking account to track it. It's going to make your life so much easier. And then the commingle part means only do business activity in that account and do not do business activity in your personal account. So many expenses get lost by new businesses because they can't track whether that expense at Walmart was for a printer or a computer or an iPad or whatever it was, or if it was groceries for home. And the list goes on and on. So many expenses are lost because we commingled our funds. On top of the fact that it's a really bad idea, and if you get audited, we want it all in one account. It's going to make it so much easier to verify things to the IRS as well. But just imagine, because let's be honest, I'm going to get to some other points that you probably haven't done. So when it's time to do your taxes next year or this year, and you're going back trying to recreate, if it's all in one bank account, it's going to be so much easier. So that's really the most important thing I think you can do from this standpoint is set up a separate bank account. Don't commingle the funds. Develop this habit early, and I promise you it's going to pay off huge in the long run. Now, with that being said, my number 2 is documentation. Nowadays, documentation is king. If you get into an IRS audit, which right now there's not a ton of them, but that could change, and it could be your turn. So we want to be prepared. Documentation is everything. Why do I say that? Well, the number one thing that I've seen whenever somebody's getting audited, normally what they're going to ask for is they're going to ask for copies of your bank statements, and they're going to ask for copies of your general ledger. And they're going to go through those bank statements and make sure that the sales or the deposits match up to what we put on the return for sales. And then they're going to go through that general ledger and find the big items and some random items, and they're going to ask you for receipts. If you don't have those receipts, you're in trouble. And one of the big mistakes I hear from people say is, well, I put it on a credit card, that should work. No, it doesn't. Why? Once again, Walmart, great thing to look at. You could go to Walmart and you could buy a printer. Or you could also buy a case of beer. I've said this in other videos. The IRS has no way of knowing which one it is, so you have to have the receipts. Documentation is going to be king in protecting you. And once again, if we're using that bank account, we're going to make sure we don't miss those expenses. Because like I said, 40% tax is a lot of tax. Number 3 on my list is 1099s. And there's 2 different angles to the 1099. One, so many times new business owners, they don't understand their responsibility. If you're paying somebody to do contract work for you and you want to deduct that, you are supposed to give them a 1099 if they made over $600. But guess what? You didn't know. You didn't get the form. So you go to call them here in the next month in January. Guess what they're going to do? They know why you're calling. They're not going to answer the phone, and you're not going to have the information that you need so that you can send out that 1099, you can avoid penalties, and you can make sure you can deduct that. Because without that, you're in trouble. So what do I suggest? Well, if you're a contractor or sales or something like that where you're out and about, just keep a small stack of W-9s in the truck or the car, and before you write them that first check, make them sign the W-9. While you hold the money, you still hold the power. Once you pay, good luck. So make sure you do that. Now on the flip side for you, so often business owners tell me, well, they didn't give me a 1099, so I don't have to count it. Or it was less than $600, and I've heard that you only have to 1099 somebody over 600, which is true. But as the business owner, all income is taxable. Just don't make that mistake, because so many people think, well, if I just get my 1099 from whoever I'm working for, that will be my revenue. Wrong. All of your income is taxable, so don't make that mistake. It can be a huge nightmare for you down the road. Number 4 on my list is get a mileage app. The next thing the IRS usually asks in an audit is, let me see a copy of your mileage log. You know why? Because most of you don't have one, and that's just a fact. And even if you go buy a mileage log and you have the best intentions, very few of you are really going to fill it out, even if you meant to. So why fight it? Go spend a couple bucks, 20 bucks, 40 bucks, I don't remember, I just pay for it, and get a mileage app. Mile IQ is a good one, Trip Log's a good one. It knows when you're moving, it knows where you're going, it tracks all the data points. Now the IRS can't say you weren't there because you've got a log that proves it, and you can print it out each month, and you can print it out at the end of the year, and now you're in good shape. Don't blow this one off, because for so many, for you realtors, for maybe insurance, for contractors, for so many different businesses, one of your biggest deductions is going to be your mileage deduction. And it's a massive deduction for some of you, because I don't know what the rate is right now. To be honest, I haven't looked it up. It's probably in the mid 60 cents per mile. So if you drove 10,000 miles, that's a $6,000 deduction. At a 40% tax rate after everything is said and done, that's a lot of money in your pocket. So just do that one. Make your life easy. Go get a mileage log. And that way when you go do the taxes, all you gotta do is pull out your phone, whip it, and there you go. Next one on my list, number 5, is expenses. And what I want to talk about on this is a misconception I see so often with new business owners, is they think that expenses are credits when they're really deductions. So they'll come and say, all right, well, how much do I owe? Okay, well then I will go buy a $5,000 trailer, and that'll get rid of my $5,000 in tax. And that's not how it works. Your deductions are worth whatever your tax bracket is. So if we're keeping that same basic 40%, if you go buy a $10,000 trailer, you're going to get $4,000 in tax savings, not $10,000. That other $6,000 is now gone, at least until you sell that trailer. So don't get confused. I hear that all the time, that people thought when they went and bought something, it was going to be a dollar for dollar on their tax return, and that's just not the case. If you have a S-Corp, which a lot of you, if your income's over a certain threshold, we're going to start talking about becoming an S-Corp. And if you want to know about that, check out my other video. If you're finding this helpful, please go ahead and subscribe while I'm talking about that. But I got another great video that tell you when to become an S-Corp. You can watch that after this one, because then you know it's even less of a return, because we're probably not getting taxed at 40, we're probably getting taxed at just your regular income tax rate. Check that video out, it could help you a lot. The next one on my list is get professional help, and not psychiatric help. You may need that, but that's not what we do here. I have to tell clients all the time, you might need a therapist, not a CPA. So hopefully that's not you, but if you do, go get some help for that too. But what I'm talking about here is find somebody like me who knows what they're doing, they've got experience, and they can answer these questions. You may not be quite ready for a monthly subscription model with a CPA. Maybe it just makes sense to go in and pay for a couple hours of their time. Get some of these things answered. Don't wing this on your own. There's too many pitfalls, too many mistakes you can make that can cost you a ton of money, and so many of them are so easy to fix and get ahead of with the right advice. I mean, this is just a short video. There's only so much I can say. However, if there's some other questions you guys want to bring up, I'll be glad to answer some of them and try to help out on that level. But get a real professional who knows your industry, who knows what you're going through, and give you some help. Not only could it help save on taxes, but it could actually greatly help your trajectory to success, because now you've got somebody basically as a business coach there to help you as well. So please don't overlook that one. There's a lot of value that can be had by getting a little bit of help. All right, the next one I have is estimated tax payments. Now, I can't tell you in this video how much you should do for estimated tax payments. If you did the one before, which a lot of you haven't, but if you did, part of that conversation, and make sure it is how much should I be setting aside for taxes? That's a good one. I don't know, because I don't know your situation. Generally, it's just a general rule of thumb. If you can set aside maybe 20% of your gross, once again, way too vague because I don't know what industry you're in, I don't know what your overhead is, but we need to be setting something aside. But once again, if we know we're going to have a 40% tax on our profit after mileage deductions, after equipment deductions, after all this stuff, we can guesstimate what our income is, then we can do estimates. The problem is that first year, you just don't know. So at least, if you haven't went and talked to somebody, try to set 15 or 20% aside in a bank account, and then once a quarter, send that in, because I can tell you right now, setting aside $1,000, $2,000, $5,000, whatever your profit is, a month is a whole lot easier than trying to come up with 12 months of it at one time after you've already spent it. So please don't take this one for granted. That's why so many guys get in trouble, and it's unfortunately why so many start to get behind on their taxes and wait to file, because they didn't get this one right, and then it starts to snowball and they get afraid. I don't want that to happen to you guys. So plan for this. Go get that last point. Go talk to somebody to help you come up with an amount to set aside so that you can sleep well at night, and if you're married, so your spouse doesn't kill you. All right, let's be honest. The last one I have on here really is important. Probably shouldn't have been last, maybe even should have been at the beginning, but it's not making a plan. Just going out there and winging it. That can come back to bite you. You might get away with it, but you also might greatly slow down your success. You might slow down your growth rate. One of the things I can say is read a lot of books. Leaders are readers. I've heard that, and I believe it. It's helped me tremendously. It's helped everybody I know who has actually done it as well. There's a lot of knowledge out there. Listen to it. Be careful with YouTube. I know I'm on YouTube, but be careful. There's a lot of guys out there that'll tell you a lot of stuff, and they're just trying to make money. So be careful with things like that. But read. Also, a great book. I love this one, The E-Myth. If you're brand new to business, get The E-Myth Revisited. It's a short book. It's an easy book. But I want you to start thinking about your business like this from the very beginning. So many people, they just start a business. It's really just replacing their job. 5 years, 10 years down the road, they wake up wondering, how am I going to keep doing this? Because they didn't have a plan. They didn't have a system. So that's a great book to start with. The E-Myth Revisited. I believe it's by Michael Gerber. Great book, easy read, very short. But try to get your mind straight from the very start when you're doing this business, and I promise you're going to be a lot happier down the road. So that's my points today. I hope that was helpful. Go ahead and subscribe. Those of you who are further down along the line or even new, check out that S-Corp video. That's going to answer a lot of your questions there. Don't let people tell you need to make your life more complicated than you have to before you have to. So with that, have a wonderful day, and we'll see you again next time.